Today was a simple question, but actually pretty hard to answer. And I'm definitely gonna have to whiteboard this one, but I'm gonna kind of go through it. So basically, what happens if you are either retired or a business owner and you go through the exchange to get your health insurance, each year you have to give an estimate of what you're gonna earn the next year. Now, that can be very difficult. So as a business owner, you don't know exactly how much you're gonna make. Obviously, you could have a good year or a bad year. And even if you're retired, let's just say that you have saved a bunch of money into a non-retirement account. Well, how do you get taxed on that non-retirement account? If you're taking money out that you already paid taxes on, what's called basis, you're not paying taxes on that. Also, if your investments appreciate and you haven't sold them yet, you don't pay taxes on that appreciation either. So it can be very difficult. It's not just as simple as saying, well, I think I'm gonna take out $60,000 from my investment account and that's what I'm gonna live off of. And from there, that's what my income, because it's not what your income is. They want you to calculate what's called the modified adjusted gross income. Now, the dollars that you take out that you've already paid taxes on, that doesn't count as modified adjusted gross income. But what is going to count? So you're gonna count what you have for capital gains, what you have for interest, what you have mutual funds or exchange trade funds. If there's turnover, there's maybe some capital gains that you're gonna get a statement back on. So it's very difficult to know exactly how much is going to go towards what you have for income. Besides just trying to make that estimate, you wanna do some sort of planning, meaning that if we take out this amount, how much is gonna be taxed? And then how does it affect us each year? So if we're trying to make not only a 2026 plan that's combining a financial plan, this is how you're going to get your money, or what investments you're going to take it from, but also this is what you can expect to pay in taxes. And then you add in that third component, this is how it's going to affect your health insurance. Bringing all three of those things can be very difficult. So it's much easier just if someone says, you know what, I have insurance through work or I'm on Medicare, just to like, all right, I'm just gonna take the money I need and not have to worry about that. Especially if you're taking from your IRA, then it's really simple calculation because it's just taxed to ordinary income. So this is, like I said, this is a simple question, but actually a hard solution. And I'm gonna whiteboard this, go through all the variables that you need to think about much deeper. Can be very, very important. And plus you get to understand a little bit behind how the tax code works, how the insurance works, and then how you can safely take money from your investment accounts that you worked hard to build up.